We all know real estate has always been a great way to build wealth, right? But let's be real, it usually comes with a massive price tag and even bigger headaches. Today, we're looking at a new model that pretty much flips that whole idea on its head, promising a way to become a landlord for as little as $100. Yep, let's get into it.
So, let me ask you something straight up. Have you ever wanted to collect that sweet, sweet rental income, but the thought of actually being a landlord makes you want to run for the hills? If that sounds like you, then you are definitely going to want to stick around.
Because, let's be honest, the landlord gig isn't always glamorous. I mean, first, there's the huge pile of cash you need just to buy a property. Then there's the massive time commitment and a to-do list that just never, ever ends. We're talking late-night calls about a broken freezer or playing referee between tenants with noise complaints. It's basically a full-time job.
And that brings us right to what you could call the landlord dilemma. The potential payoff is high for sure, but the cost and the sheer hassle of doing it the old-fashioned way, well, it just feels totally out of reach for most of us. So is there a better way?
Well, what if you could get all the good stuff from real estate investing? The income, the property value going up, but without any of the landlord nightmares. That is the exact promise of this new model we're about to break down, one that completely rethinks how we can get into the property game.
So, meet Arrived. It's an online platform that lets you invest in shares, like little pieces of rental homes and even vacation rentals. And here's the crucial part. You get to be an investor, not a property manager. The company takes care of all that messy landlord stuff for you. And here is the number that just changes everything. $100. That's it. That's the minimum you need to get started. All of a sudden, that huge barrier to entry, hundreds of thousands of dollars, just kind of crumbles, making it something almost anyone can actually afford. So the whole thing really boils down to this one simple, powerful idea. You can earn potential income and watch your investment grow without ever having to worry about fixing a leaky faucet. Okay, so I know what you're probably thinking. This sounds a little too good to be true. How does it actually work? Is it even legit? Fair questions. So let's dig into the nuts and bolts and see what kind of credibility this thing really has.
Well, for starters, there are some pretty heavy hitters involved. The source material points out that Arrived is backed by world-class investors, and that includes Amazon founder Jeff Bezos. Yeah, that Jeff Bezos. When you see a name like that pop up, it definitely makes you pay a little more attention.
And the numbers themselves tell a really interesting story of growth. The platform already has more than 950,000 investors signed up. But here's the real kicker. It's already paid out over $73 million in dividends. So that tells you this isn't just a startup with a cool idea, it's an actual operation with some serious scale and a proven track record.
And the process for getting started is designed to be incredibly simple. First, you browse through their list of properties, which they've already vetted. Second, you just decide how many shares you want to buy based on your budget. And finally, step 3, this is the best part, you just track your investment online while Arrived handles everything else, from finding tenants to fixing things. It's a totally hands-off process. Now, what if you want your money out? That's a huge question, right? Well, they've got something called a secondary market. This allows you to sell your shares to other investors on the platform. And that is crucial because it gives you a potential path to get your cash out. It means your investment isn't necessarily locked up for years and years. So with all of that in mind, we really get to the most important question of all. Is this kind of thing actually right for you? It's definitely not a one-size-fits-all deal, so let's break down who this investment model is really built for. So this could be a really great fit if you're looking for that real estate exposure without the headaches, if you want to start small with your capital, or if you're just looking to diversify beyond stocks and bonds. But on the flip side, it's probably not for you if you need to be able to get your cash out at a moment's notice, if you're someone who wants hands-on control, or if you're chasing quick, short-term profits. It's also probably not a good fit if you want something with little to no risk. All right, let's just zoom out for a second and look at the big picture here. What's the key takeaway for your own investment strategy? The potential upsides are pretty clear. This gives you a way to diversify your portfolio, which is always smart. It gives you access to real estate, which historically has been a decent way to hedge against inflation. And you get to do it all with very little effort and spread your risk around without needing a massive bankroll to get started. And that really brings us to one final fascinating question. By breaking down properties into these small, affordable shares, this kind of model is opening up an entire asset class to millions of new people. So, is this the future of how we invest in real estate? Only time will tell, but it's definitely a powerful shift worth watching.